Vaibhav, is it even possible to predict what could happen in the near to the medium term?
Yes, I think you're absolutely right saying that how can we predict something where market is kind of trying to show a particular picture, whereas Fed in this whole scheme of things, and which is the most important player at this point in time, is thinking the other way, meaning that if if you see Jackson Hole kind of speech, which is about 8.5 minutes kind of long, very clearly mentions that they are very focused, razor focused on bringing down the inflation at the cost of some pain. Now we all know that in the history as well that market should not fight Fed, right? And if the more you keep on fighting the Fed, the uglier it becomes at a later stage for the market to kind of grapple with, right? So here the intention is very clear that Fed intends to slow down in terms of the economy and subsequently the markets, because they do think that kind of shorter term pain, though smaller, is far better than the longer term pain to kind of go and tackle the inflation. So probably for the next few months, things are likely to be volatile as we see.
There was a note that I read from Victor Schwetz of Macquarie, who says that despite the Fed in its rhetoric is sounding increasingly quote unquote hawkish, the resultant impact on spreads, on yields, etc., is there, but it's not quite there. I mean, CBOE VIX went up and then came off. Yes, yields have gone up yesterday, but otherwise they've not really like shot up per se. So is this a scenario, Vaibhav, of the markets not doing something until they start doing something?
Absolutely. And generally the tendency of the markets is always to be forward looking and be bullish and optimistic, right? And that is the conflict of interest, I would so say, between the markets and the Fed. So markets would always want to be bullish, and people would look for narratives, which is precisely what happened probably a month ago, where people started calling Fed as pivoted, right? Till the time that in Jackson Hole, every of those kind of narrative is where the Fed actually punched holes in them. So in effect, while market may think whatever they want to, as we say, US 10-year is already at 3.25. Of course, 2 years even higher as well. But it clearly shows that now the rates are likely to be higher for longer, as compared to the narrative earlier, which is lower for longer, right? So that's the change which has happened. Now, when can we expect probably this to change? Either market kind of crashes, and Fed has kind of to come and probably intervene, or probably you see a slowdown in the economy and probably substantial correction in your inflation and inflation forecast as well, is when we'll think that there can be a likely change. So till then, probably we should be very objective in looking at the data and frame of view rather than the narrative which the market would always want to have.